In this video, we will break down the reasons why Bitcoin has fell. I will also reveal the biggest mistake that most investors will make and explain how you can avoid it. And finally, I will share my strategy with a spreadsheet for the bear market. So watch until the end. And before we jump in, my name is Arseny, welcome to Bestper channel and enjoy this video. Let's get started. Now, trying to predict the price of Bitcoin is rather a wild goose chase because it just ain't worth it. It's neither the market nor its technical analysis that can give you an insight into the future, but rather those are whales. And whales are mammals that live in the ocean or in an entertainment parks. Just kidding. Whales has become a term that is associated with market manipulators. So whales, they will come to the market and they will buy the majority of the available positions, driving the price up and making other investors join the game and jump on board. And once the price reaches their target level, they will liquidate their positions and cause the price to crash back down to its inherently acceptable level. Your goal as an investor is to recognize these patterns and profit from them. So if you can time the entry of the whales, you stand to make impressive profits. Now, we all know that the market is cyclical and the cycles, they repeat. And again, these patterns are followed not because the majority of investors want to follow them, but because whales want majority of investors to follow them. And so if you can understand these different stages and what causes each stage and which stage follows which stage, you can essentially predict the stages, not the price of Bitcoin. And therefore you can stick to the strategy of whales, you can emulate their strategy and therefore profit from that. So let's review and break down each of the stage of the market cycle. So the first stage is stealth stage. It is called stealth stage because the prices are usually very low and the goal of whales is to keep them very low so that they can buy a lot of Bitcoins at a very low price, and they need to prevent investors from buying Bitcoins. They need to get these Bitcoins from somewhere and they can get it only from those who sell it. And therefore, they will spread a lot of fear, doubt, and uncertainty to do this fear mongering and cause everyone to be afraid, to doubt the whole future of crypto so that they can buy with as low prices as possible. Now, the next stage is awareness stage, and it usually comes in when whales have gained enough positions and they feel that they can begin the bull run. So now we can see some good news appear. Some experts begin to claim that Bitcoin will hit its new all-time highs, that the price of Bitcoin is gonna be 1 million at some point in future. More investors, more institutional investors, smart money begin to jump on board, and we can see that Bitcoin begins to get some traction. It begins to grow. And this is where we can see some price plummets, some first sell-offs, because whales want to begin to profit, but this quickly will be neglected and the price will continue to grow. Now, the last phase before the collapse is the mania phase. So this is where the rest of the crowd joins in. This is where small investors, retail investors buy the Bitcoin because they believe that it will go through the ceiling, it will hit its all-time highs, and there is even a term for that, weekends. Those are people who invest impulsively rather than doing a fundamental or a technical analysis. Usually those investors are the ones who will sell first when the price will begin to decline. In this point, usually a cryptocurrency is at its highest prices and the momentum is slowing down, and there are not as many new investors that are happening on this bandwagon. And the last is the blow off phase. This is where whales begin to sell massively and the price begins to decline. And on the previous phase, the investors that jumped the last, usually they invest again because of the emotions and they do not have really a lot of fundamental knowledge and they haven't done enough research. So they just believe that this is a bubble and they begin to sell their assets. When other investors see that the price is plummeting, they follow suit and sell as well. So the price continues to go down even more. But at this point, whales has sold off the majority of their positions, and for them it doesn't really matter. Their goal is actually to accelerate this decline, so they will spread even more fear, more doubt, more uncertainty. They will cause fear-mongering, because their goal is to come back to the first phase where they will begin to gain more positions, to gain more Bitcoin at as low price as possible. And I believe that right now we're at the end of phase 4 and at the beginning of phase 1. So the prices fell down, and during the last 7 days we were in this consolidation where the price is like stuck at this 20k level, and it doesn't go lower but doesn't really go much higher. And a lot of people say that this is where bulls are fighting bears, but I believe that this is just where whales are beginning to gain their positions. They're buying more and more Bitcoin, and they're just gradually progressing to the next stage, which is the stealth stage, to repeat this market cycle again. Now I would like to also bring up some other reasons why the price of Bitcoin has fell down. Now, firstly, there is more and more evidence that crypto is correlated with stocks market. And indeed, if we look at the indicators of each of these markets, S&P 500 and Bitcoin, we can see that they go really close to each other. And the reason why this correlation begins to amplify is due to institutional investors. So smart money or institutional investors are different hedge funds, venture funds, so very big institutions and companies that invest not just a few $1,000s, but a few $1 billion, if not hundreds of billions of dollars. And so most of these investors, they're very familiar and they've been investing for a while into stocks market, and only now they're catching up with crypto. And that's why if they recognize a recession in stocks market, they will probably sell as well in crypto and cause the price to decline. Since S&P 500 has been taking a beating for the last 6 months, crypto just follows suit. Now the second reason has to do with interest rates. Federal Reserve has recently increased the funding rate to cool down the inflation that is hitting its 40 years all-time high. Right now, it's the inflation in the US is like 8.5%, which is crazy high. Which means that if right now you have $100, in 1 year you're gonna be having $92, whereas the average APY for a saving account in the US is less than 1%. So your money are literally melting down on your eyes. So the actions of Fed are completely justifiable, but the consequences that they have on crypto is quite detrimental. When interest rates become high, it means that it's more expensive for you to borrow money. It's more expensive for businesses to take out loans. Mortgages become more expensive, and money in general become more expensive. And when the price of money increases, people become more reluctant to invest them in other assets. They become less tolerant to taking on new risks and going for new ventures. This obviously brings down the demand for not only crypto, but for stock market, for real estate investing, essentially for all sorts of investing, aside from investing in the bank and putting the money in a saving account that brings literally nothing. But it's crucial, it's pivotal to understand the relationship between the cause and effect. It's not us, regular retail investors like you and me, who look at the new interest rates of the Federal Reserve and make a decision to begin to invest less, and we cause the price of Bitcoin to go down. Those are whales who see that now for people, for us, it's more expensive to invest. And that's why they bring the price down, and we then see that the price is going down and we begin to sell as well. Now let's talk about the strategy that I'm using right now in the bear market. So when it comes to choosing the strategy, you always should keep in mind that in crypto, the majority loses. 90% of people lose because crypto is a zero-sum game, which means that You win $100 if someone else loses those dollars. That's why if more people follow the same pattern, this opens up a window of opportunities for whales, for market manipulators to purge weakened hands and to take money from this crowd of investors, because the more people there are, the more money you can take from them. So that's why your strategy should be completely tailored to your way of thinking, to your philosophy, and now I'm just going to share the strategy of mine. So firstly, let's consider the left part of this strategy and consider the actions that I'm taking when the token is falling. And this strategy is quite common. It's called the cost averaging. So every time a token gets halved, every time the token falls by 50%, I invest a fixed amount of money into it. And the reason why you do this investing in a ladder pattern is because you never know how low the coin will fall, and it is impossible for you to know that. But by following this strategy, you will cost average the purchase price of the coin. You definitely won't buy everything at its deep, but you will still get it at a quite low price. Now, when the coin is rising, I am following kind of the same pattern. I just call it profit averaging. Not sure if this is how this strategy, if it actually exists, how it should be called, but this is how I call it. So every time the token doubles, every time it grows by 100%, I sell 25% of the remaining number of tokens that I have. And in this way, I can maximize my gains, but at the same time, manage the risk in a quite reasonable way. And again, if you want to take a closer look at this strategy, then go down to the description and there will be the link. And there also you can find much more different cheat sheets that I've made videos about. So feel free to use it, and I will really appreciate if you will smash the like button. This will be the greatest thanks that you can give it to me. Now, how low can we continue to fall? Well, firstly, I would say that right now we're not in such a bad position, because during the previous Bitcoin crisis, the price of Bitcoin fell by 85%. The price of Ethereum fell by 90%, and the price of Cardano, which is one of the top coins, fell by 97%. And in this crash, the price of Bitcoin fell from 40,000 to 20,000, which is around 50%. So definitely it's not the biggest crypto crisis. And just keep in mind that everything is cyclical. It grows, it falls, it grows, it falls. The whole point is to think not as the crowd, but think rather as those whales, those individuals who make smart decisions and who actually manipulate this market. So a very quick recap. So far we have fell quite significantly, but not detrimentally. We have fell down by 50%, whereas last time Bitcoin has fell 85%. Now, there are a lot of superficial reasons why the price of Bitcoin is falling down, like the increase of the funding rate by the Fed, and also the decline of the stocks market, the decline of S&P 500 index. And because crypto is rather a zero-sum game, if someone loses, someone wins. And most of the time, actually, I feel like all of the time, whales are those who win. So if you don't want to be among those less fortunate investors, then think from the point of view of a manipulator, of market manipulator, from the point of view of a whale, and try to emulate his decisions. Also follow your own strategy, because following the strategy of the crowd will usually lead to losing money. And at the end of the day, me and other people cannot really make any predictions about Bitcoin, because we do not really have any influence on its price. The share of crypto that I own, that probably you own, I don't know, like all of the subscribers of this YouTube channel own, is a small fraction in comparison to what whales own. I mean, if you don't have any influence on the future, then how you can actually predict it? So that's why my approach would be rather, instead of predicting where the price will go, try to be in a position that you're comfortable if it goes both ways. If it grows up, you sell. If it goes down, you have enough budget, you have enough funds to buy. So thank you so much for watching this video. My name was Arseny. I hope that you have enjoyed this video, and if you did, then please smash the like button and follow the channel if you haven't done so already. Also check out my Telegram channel, where I publish the most important updates and news about Bitcoin and other cryptocurrencies. And thank you so much. See you in the next videos. Bye.